Hey guys, welcome back to the Greenback Voyage podcast. This is now our weekly podcast, and we are in February week 2. And I'm your host, Shravan.
And I'm your co-host, Joel.
And this week, while it's not as insane as last week, there were a lot of surprises that could have future implications later on in life. I think the first thing we need to talk about, though, going off from last week, is the GameStop controversy. So I think, as everyone might know, GameStop dropped from, $200 to $50 almost, and rebounded slightly. But yeah, looks like that saga is over, don't you think?
Yeah, I mean, people are selling out. I think a lot of did you hear about that hedge fund that made almost $700 million
Off of the shorts?
No, off having a long position in GameStop.
Oh,
yeah. So, that was one hedge fund that did it, and I think a lot of Redditors are starting to sell, and that's creating a panic sell situation with these stocks.
yeah,
And
especially with Robinhood.
Yeah, I was surprised because I think in the morning, Robinhood got rid of the restrictions, right? So in the morning around 9:30, the stock started soaring, actually like 50%, and then it started selling off, and it went lower. So yeah, I think it's over. It's not gonna go anywhere from here.
Yeah, and I think the main losers right now, it's not much of a surprise. I think everyone kind of saw this coming, is the small retail investors who got in really late.
Yes.
And on Wall Street Bets especially, I've been hearing rumors that the moderators on Wall Street Bets look to be gaining, the most out of this kind of insanity. They're kind of selling stories to news articles and getting like interviews and that sort of stuff. And because they're moderators, they kind of have the power to, approve or disapprove posts. So they can kind of, if they wanted to, manipulate the market in terms of when to sell the GameStop, AMC, costs, and all those companies.
Right. I mean, I respect Wall Street Bets, but to me, what I see is what's happened is, I think all the the big moderators, the guys with a lot of capital to inject in the market, those guys who bought up GameStop, they made a huge amount of gains. They sold out, and they continue to say, hold the line, keep buying, and trying to get in retail buyers in. And I think they manipulated some of the huge members in Wall Street Bets. I think that's probably what it ended up having. I mean, it's a medium for them to gather small retail traders and manipulate them and create FOMO. And yeah, I go on there, see posts of people losing hundreds of dollars, some Robinhood accounts being wiped out because of GameStop and AMC. So yeah, it's pretty sad.
Yeah, and I guess going off on that, with the new SEC chairman, it's going to take a couple of months till Gary Gensler gets appointed to the SEC chairman role. But with them investigating this manipulating trading activity, and Gary himself kind of a very strict policymaker, like I don't think he will let Wall Street run the way it was running for the past 4 years. But do you think he should maybe focus more on education investors, or maybe having them get certificates in order to trade? Or do you think he should focus more on regulation itself?
I think there needs to be some sort of regulation in the markets, actually.
Okay, so I guess against the hedge funds and all that, trying to get them.
Yes, against.
Would you say
against?
Would you
not
say
just hedge funds, but not just hedge funds, but entirely with Wall Street Bets as well. I think there needs to be some sort of regulation to what the leaders of Wall Street Bets are doing, and also, it gets a bit tricky with what do you do with regulating hedge funds? Like, how do you control them? Where you don't know where they're getting their insider info. How you can't really stop the act of shorting stocks. I think we should probably have shorting available for traders. But for this type of thing to happen, where GameStop surges, to this level of magnitude, I think that needs to be regulated.
Yeah, that is definitely true. I think it'll be hard to regulate it though, because with social media and the way some ways the black market works, especially nowadays, how easy it is to get on the black market and get information off there. It'll be hard for the SEC themselves to kind of regulate it. Maybe if the FTC got involved, sure, they could do something, but I think it's almost too little too late, which is why, I don't know, I think on the other side, they should maybe focus on education and make sure they mitigate the retailers from just losing the money that they've worked hard to maintain, and have some like sort of SEC certification that they need to take in order to get into the trading platform itself.
Yep, that's true. Also, like, I think they need to release the short interest on a much smaller time scale, because now we get and institutional holdings. So, every quarter we get what each hedge fund or capital management fund or whatever fund is holding for 4 times a year. I think that needs to be less of time frame, maybe monthly or even bi-weekly. And also we need to get traders need to know the short interest on a stock instead of having to pay for it. I think it needs to be free for everyone. And
I guess another attention on Wall Street right now is that information time. So I think a lot of Wall Street hedge fund managers, they're trying to implement the T+1 rule now from the T+2. And for those of you who don't know what that means, it's just basically that there is a requirement that when you make a purchase on a stock, it takes within 2 days for that transaction to basically change. And with that lagging information that we have now, lots of fund managers are trying to get it down to 1 day because of the technology that we have now. And Robinhood is on this as well. They really want T2 down to T+1, just because that's really what caused a lot of controversy within them. They didn't have the funds to basically give it out to whoever their broker is specifically. So yeah, I think just information in general should be out there to the public a lot faster.
Yeah, and there needs to be some restrictions on apps like Robinhood for things like options trading. I think there needs to be like a minimum of at least 6 months for a person to get exposed to options. And when you go on Robinhood, if you're 18 and you've been on the app for like a week, you get level 3 or level 2 options, which is, I think it's crazy, because if you buy the wrong thing, you can wipe out your account like within minutes, even days. So yeah, I mean, there needs to be some restrictions on certain apps. As far as regulating, yeah, go ahead.
No, I was just going to say it's easy enough for Robinhood just to basically say, oh, if you think the stock is going to go up, you should buy a call. But if it's going to go down, you should buy a put. But it's more complicated than that.
They do have descriptions, but I think, so when you buy a stock, right, you look at the company's fundamentals, and if you're like a technical guy, you look at the technicals, and if you think it's going to go up, you buy into it. It's simple as that. But when it comes to options, it's so complicated. If you buy let's say you're completely new to options, and on a Wednesday you buy a weekly call by accident, like the likelihood you lose your money is like 90 or 80%, right? So the experience value like people have is very limited for Robinhooders when it comes to options trading, and you need to limit that to maybe 6 months, or at the minimum 3 months, because I think that's getting young people overexposed to a lot of these things it's not good for them to become a good trader or a good investor. I think you need to take things slow, and yeah, it depends, because I think most of the traders, they want to make a quick buck. That's how it is. But getting exposed to these types of things, to me, I don't think it's a good idea. I mean, we're speaking from experience, so
Yeah. And what
yeah.
we've seen with our friends and our own kind of type of trading. So
Yeah.
it is kind of difficult, but I don't know. We'll see what they do. I think there will be some regulations, but how far it will go will be a bit tough.
Yeah, the simple counter argument would be, it's my money, why do you care? So, but a lot of people do get manipulated on forums like Wall Street Bets and FOMO and all that stuff. So people go YOLO and things. That needs to be regulated.
And there's so many, like, I guess, backdoor deals that we don't even know. Like right now, Yellen requesting an ethics waiver just to talk with Citadel. That's like the main highlight at the moment. But if you really look at it, there's so many of these powerful political figures that talk to these hedge fund managers, that talk to these investment bankers, and whether or not they give them information, who knows? But they have some sort of advantage there. They have to have some sort of advantage if they're paying, I think, Yellen like $700K for that speech. Like,
yeah, and she got like $800K for speaking fees from Citadel.
Jesus. But yeah, I don't know why she would.
I mean, that's a lot of politicians. It's not just her. A lot of politicians do it. Obama did it. Everyone does it. So I mean, that needs that. I'm not saying just because everyone does it, it's okay. But I think that needs to be stopped, because if someone's going to give you like nearly $1 million, are you going to speak ill will of them? No. Are you going to do anything? Are you going to support legislation that that hurts them? No. So those need to be stopped, obviously, and that type of behavior probably needs some type of regulation, or even like contribution limits or something like that.
And it's the same way with analysts. If you look at analysts, you rarely see a sell rating on most of the stocks. Like if you look at most of the stocks, if they really think it's bad, they'll most likely tell you to hold. I don't think over 10% of the stocks within that can be publicly traded have more sell signals than they have hold or buys, because the main issue there is if they put out a sell signal for that company, if that company maybe wants to do like a M&A or maybe wants to offer more shares, they're not going to go to that investment bank because they don't trust them now. So it's the same way it works there. You can't really trust what people tell you. You have to look at the figures yourself and make educated decisions on your own. It's the way the markets work.
Yeah, I mean, I don't follow analysts that much or take their price predictions or things too significantly, unless they have a good track record, of course. But when it comes to analysts, I mean, they were first, against Tesla, and now they're giving Tesla, $950,000 price targets. I don't understand how they pull up their numbers.
Yeah, it's actually insane how they can just do that and then move the market like 10% if they put a buy rating or sell rating on that. Like I remember I had Beyond Meat a while back when it was at like 119 or something. And every day it would just fluctuate up and down because either Beyond Meat would have some insane analyst reviews or would have some terrible analyst reviews. They really didn't have any news from when it went from like 120 to when I sold at like 180 range. And it was just insane just seeing that, oh, okay, I trust this company, but like I don't want the price to move like this. I want it to move off of news that Beyond Meat is doing, not really off analysts.
I mean, it's a free market. If an analyst is going to say it's buy, then the market's going to react and start buying. But I mean, as long as you're not a trader, in a long-term investor, it probably doesn't matter to you, right?
That is true.
But the stocks like Beyond Meat are going to be very volatile. I mean, even Tesla, 3 years ago, it was one of the most volatile stocks on the market. So. But as long as you're a long-term investor, and I'm pretty bullish on Beyond Meat, it doesn't matter. Yeah, but when it comes to analysts, I don't understand, man. Like 2 years ago, they were like, Tesla is overvalued, it's going nowhere, and they had very low price targets for Tesla. But now once it's up, almost 800, 850%, now they're giving, $1,000 price targets, even bull cases of 1,000 and 100. Where are you getting these numbers? Like, how you work at a well popular or respected investment banking firm, and you come up with the valuation like this? Like, so are you trying to move the markets? Like, where do you come up with these valuations? Like, I don't understand.
Yeah, it's like I see some people out there who have like discounted cash flow valuations, asset valuations, and they just look at the numbers. They don't look at the future prospects or anything. And I know like a couple of guys back when Tesla was at like 800 pre-split in January 2020, who were saying like Tesla is way overvalued. I'd buy them at like $200 only, and they still maintain that target. And they just looked at the numbers themselves. And it's not like Elon Musk is just like every day he's saying, you know what, I'm going to design a rocket ship that just goes to Uranus and back within like 5 minutes, and it's going to be attached with the Tesla model. Like, no, Elon Musk is saying the same things that he's been saying for like the past 7 years. So how analysts just say, you know what, yeah, we're just going to go from like $200 to like 1,500 is just, it's ridiculous.
Yeah.
But that's how the world works. And yeah, I don't know. Maybe if I ever get in that industry, maybe I'll know how it works. But I still think it's bullcrap.
I think you sent a graph of Goldman Sachs showing non-profitable companies index, right?
Yes, I did.
Which absolutely exploded this year. Mm-hmm. Yeah, imagine there was an ETF or something for that.
Jesus. I mean,
it would definitely outperform ARK.
Yeah, that's true. I mean, most of them were from SPACs and IPOs, and it's just like the insane runoff of those. So,
well, speaking of SPACs, you said something about Richard Branson.
Yes, Richard Branson. This is actually very recent news. I didn't even have time to write this down, but one of his SPACs is merging with 23andMe, which is very interesting. It seems like Richard Branson himself he is a great guy, but it seems like his approach to business is whatever the hype is in the market, or wherever he sees a market getting ready to explode, he gets in as fast as he can. So if you look at 10, 15 years ago, airplanes were like the new thing. There were so many airlines being created, and Virgin Galactic Airlines or something like that?
I think it was just Virgin Airlines, right?
Yeah, and that was created. But is it running anymore? I don't think it is. So it's the same with F1. Like F1 was taking off from 2008 to 2012, and he got in. Even though he was the worst car out there, he got in like 2009, 2010, and only did 2 years in F1 before he went away. And it's the same here. Like space is now taking off, so he created Virgin Galactic, and now genetics with ARC-G, Kathy Wood and all praising it so much. He's, I guess, decided to go for 23andMe. Yeah, but we'll see how long these ventures last, because it's hard to tell with Richard Branson where his mind is at currently.
So 23andMe is just like an Ancestry.com type thing, or
it's basically Ancestry.com.
How is it scalable?
That is a very good question. I'm not.
They need to expand in other places.
Yeah, and it is pretty like expensive to get them. Like just I think just the cheapest one you can get is like $50 or something like that. Which,
if their core business is selling these types of family tree diagrams, and it's expensive, like the average consumer's not going to care about that at all. They need to be doing something like pharmaceuticals or therapeutics companies. Other than that, I mean, just looking at 23andMe website, seeing their products,
I think they have like
some being scalable.
They have some like health plus ancestry thing where it can kind of say like your genetics are associated with type 2 diabetes or something like that.
Okay, that changes a lot of things then.
Yeah, so they have that as well along with it. So that's how I don't know how they get that info, but it's 23andMe.
Okay, that seems interesting then.
Yeah, I don't know if I'd invest in it. I'm not very familiar with all those genetic technologies, uh, but yeah.
Yeah.
But yeah, I guess going off of Richard Branson and all that, Virgin Galactic had one of their test runs recently, this past week, and from the video itself, right before the test rocket crashed, they did say they gained valuable data from their latest run. But what was very interesting is that Washington Post recently reported that I think there was a tourist run back in 2019 where they had 3 people on their ship, and one of their wings on the rocket was like extremely damaged, and one of the engineers there, he was surprised that the rocket itself survived that entire trip, because it was so far damaged that they didn't think they would make it. And they didn't even realize it during the flight. They only realized it after the rocket landed and after they took apart the rocket itself. So, very interesting. But, yeah. I guess with Bezos and Musk focusing more on their space projects, it looks like Chamath and Branson really want to make sure the tourism space gets off.
Yeah. I think, I don't know about Elon Musk going for tourism. He's probably going towards interplanetary travel. Bezos is with his Blue Origin company. He is going for tourism. But speaking of Bezos, he stepped down as the CEO of Amazon.
Oh yeah, that was this past week.
Yeah, and now the AWS CEO, he is now the CEO of Amazon.
Yeah, Andy Jassy, I think.
Yeah.
Yeah. He's a very strong guy, I think.
Yeah, I mean, he brought AWS from nothing in the past, 10 years. He absolutely exploded that area and gained a lot of market share with AWS. So it makes sense.
I think it's very interesting. I think it's very interesting with Bezos though, because he's not stepping out of Amazon. He's just stepping down to a more executive role. But
he's still going to have a major role.
Yeah, it's not like he's diluting his shares or anything, or his share majority within Amazon.
No.
It's kind of, I guess, controlling the company without being in the spotlight, basically. And
yeah, he's definitely gonna have a huge say in things.
Yeah.
But he's probably not. He's probably trying to focus on other things, is my guess.
I don't know.
Maybe on Blue Origin or some other project.
I mean, that is what he said. He was quoted saying he wants to focus on, like, the societal charity funds, I think Earth Day Fund, as well as Washington Post and Blue Origin. But it's very interesting for me to see that Bezos is only stepping down now when I guess the Democrats kind of take control over the government, especially with the FTC trying to knock on the antitrust policies and making sure that Facebook may well and truly be divided up, and they might look to Amazon and try and do the same thing. I don't know, it's like the timing is coincidental. It is true that Bezos, I think last year, said he will step down at some point within the future, in the near future, but I don't think anyone saw it this early.
Yeah, it was a surprise.
Yeah, but speaking of Amazon, they released their latest earnings, and they had
earnings.
Yeah, it was insane. I think revenues were like more than 125 billion, which is over 40% year on year.
It's amazing for a $1 trillion company to put up these numbers. 44% year on year, and sales to be 30% out. Like that's just crazy. I mean, even Apple, Microsoft, these guys with Azure and new iPhone sales, like it just blows me that these $1 trillion companies are still growing at such a fast scale. I mean, that's just crazy.
It's insane. But yeah, hopefully, I think with Andy Jassy, I hope to see Amazon start to make more profit, because they've been so focused on revenues and cost saving and trying to take over that e-commerce market within the US, that at some point they need to make on their promise that net income overall will start to increase along with revenue. It'll be at a slower rate, no doubt, but Yeah, I don't know when investors will start begging for that to happen, but we'll see, I guess.
Yeah, they'll probably shift more towards AWS, that type of sector. I mean, that's becoming one of the most profitable sector sides businesses, right? So
Yeah.
um, yeah.
Yeah, but in other news, with Amazon related, is they lost their bid to postpone the union vote at the Alabama warehouse,
Mm-hmm.
which also coincidentally comes along with the Bezos stepping down in earnings. So I don't know if they released this news based off that and thought that no one would focus on it, but we're trying to focus on it. But yeah, basically, the warehouse workers at the Alabama warehouse are trying to unionize, and they have a vote this week on whether they'd want to unionize that entire warehouse. And I think this is different from 2014, where a couple Delaware repair technicians tried to unionize their own facility there, but the vote didn't turn out favorably, mainly due to cost issues. But I think now with the coronavirus pandemic and how Amazon kind of handled those first couple of months, along with Prime Day, those protests as well, and how that got delayed, and how the workers weren't happy with their conditions inside the workspace. I think they might well and truly just start to unionize across the country.
Right.
But we'll see on that. I don't think it'll be like a full-on unionize within Amazon. I think Amazon, with it only recently implemented the $15 minimum wage policy, right?
Mm-hmm.
So they're trying their best to make sure they don't unionize, and I think it'll be successful in some areas and unsuccessful in others.
Yeah, there's been strikes against Amazon in other countries as well, not just the US.
Yeah.
But this upcoming week we have some important earnings reports. I'm going to be watching Palantir, Ultrax, and Disney, and also Twitter, to see if they had any decline in user growth because, of the whole Trump thing. But what about you?
I think Twitter might be the opposite. I think they might have increased with the entire controversies. And I think they might start growing at a faster rate than they were before.
Yeah, and also they shut down the other. Yeah, they shut down the other platforms as well. Yeah. So I just want to see confirmation.
Yeah, and with Parler gone, or Parler starting to deteriorate,
they can't find a host for their platform.
Yeah, and I think the board itself kicked out the CEO. So yeah, that'll be interesting. But in terms of my earnings, I'm mainly just watching Simon Property Group. Their main issue that I hope will start to rectify is their accounts receivable, especially in rent collection. They have been filing lawsuits, I think, against Gap and all, on Gap not really paying them, and other department stores like Macy's not paying them. And as a result, like, their accounts receivable itself jumped up, I think, $300 million within the past year.
Wow.
Which is, it's an insane amount. So they need to start capitalizing on that and start, I don't know, trying to find a middle ground where they don't make them too angry, where they'd want to leave after their lease is out, but at the same time start to maybe try and find, some way of getting that money. But they got JCPenney. I don't know if you know that. They own JCPenney now. They own Forever 21. And they own, I think, 2 other departmental brands. So, we'll see how that's played out this I guess, quarter. But I don't have high hopes for them. I'm expecting them to start to increase in maybe Q2 and Q3 as the weather gets better and as more vaccines are out for the consumers. So, yeah.
Yeah. I think we're making some good progress. I mean, we know some people who've already taken the vaccine. So if more people start to get it, we hear about it. Some of these, mall stocks and Simon Property Groups, things like stocks like that would be a good add to our portfolio.
Yeah.
Speaking of adding stuff, yeah, go ahead.
Oh no, I was gonna also say in other SPAC news, I also forgot to mention this. Along with the Richard Branson acquisition, Alex Rodriguez has filed to IPO a SPAC, raising I think 500 million, and it's backed by a Blackstone-based corporation, Antra Capital. So that's very interesting to see Alex Rodriguez, and I think he's looking for a sports type of company to try an IPO, which I guess makes sense. But yeah, that's it from there. But in other SPAC news, I don't know, you're invested in Clover right now, Joel.
Yeah, I initiated a small position this week.
Yeah, I guess you know more about the controversy that's happening within Clover and Hindenburg Research right now.
Yeah, basically Hindenburg is saying that in the Clover management didn't disclose that they were being investigated by DOJ, right? And Chamath got a bit angry on Twitter, and he said, "Why didn't you guys come talk to us before, releasing this and that?" And the stock did dip, but I think once Chamath said, once he said his reasoning on Twitter, it actually bounced back about 5% and closed, I think, about 4% on Friday. So as far as what Clover's doing, I think it's a great investment, because I see Clover having the same meme stock status as some other stocks, and at a $13 price, right? A lot of these Wall Street bet guys and these small retail traders are going to jump in on the stock. It's very popular. There's a lot of everyone's talking about it. So this stock has a lot of potential to break highs and go 20 plus. So that's my take on Clover.
Okay. I mean, do the fundamentals look okay within that company? I haven't really.
The fundamentals aren't that good. It's more so, even like I got in early on Palantir, right? It's not, the fundamentals weren't that great. They weren't profitable for a very long time, but I see the potential in it becoming a meme stock status. I think it's going to go 20 plus, 25, maybe even 30 in this year.
Okay. Yeah. And
I think it's more of a speculative play.
All right. And I think another thing, going back to Hindenburg Research, not really Clover, because I don't know much about that, but Hindenburg Research highlighted within their report the importance of short sellers within the market, which I think you talked about earlier, by basically finding companies like Lucan Brand or Enron and, exposing them for the frauds that they are, which I thought was very, very important. I haven't really looked at, with everything that's happening with Citron Research and how they're transitioning from their short seller standpoint to a long-term investing. It was, I guess, difficult for everyone to kind of remember why short sellers existed in the first place.
Right. I mean, they've exposed a lot of frauds like Nikola, right? So you got to give some credit to what they've, done. So
yeah. And lastly, on a last note, let's talk about the COVID update. So I know that the South African variant popped up in our state, in Virginia, this past week, which is concerning since I don't think there is a vaccine or a booster out there that can really help against that. There is I think AstraZeneca did confirm a booster shot for the UK variant itself, but not for the South African one.
Yeah, I mean, with the booster shot, you can't really do anything. You got to have the second shot, right? So you have to look out for that news. But having these variants propping up all over the place is quite concerning. And we're in a cold winter weather, right? So it's gonna be tough.
Yeah, but it looks like Johnson & Johnson requested approval from the FDA as well. So hopefully with their
with one-shot vaccine,
that
could be a game changer.
Yeah, and it doesn't require as much of a handle as Pfizer. I think they only require a temperature of around like 30 degrees Fahrenheit. So logistics should be much easier than the other two. But it's not as effective, I think, as Pfizer or Moderna.
Okay.
Yeah, Novavax is also there, so hopefully they're also going to come up soon. I think they hinted at the UK research was at around 90% effective rate. So good news all around in terms of vaccine area. But yeah, and lastly, we're just going to glaze over this. The Democrats passing the budget resolution to get the stimulus rolling, which, they're finally on the case only 1 week after we highlighted how they weren't on the case. But
we'll have
it seems like Biden, it seems like Biden doesn't want a repeat of what happened in the Obama administration, of how he had to haggle with GOP senators in order to get that bill passed back then. But it does look like he has kind of lowered or increased the requirements to get now the $1,400 stimulus check.
Okay.
And it's kind of iffy on whether the $15 minimum wage will be in that bill, but I think it's going to be unlikely that they implement that.
No, he said it's not going to be in their bill.
Yeah, especially with that Democrat from West Virginia. I don't think he will accept that.
See, there's certain things that they need to get passed, in my opinion. I think $15 minimum wage should get passed. You should have universal health care, especially in a time like now when we have a pandemic. So, yeah, there's a lot of things that I'm hoping that this administration would get accomplished.
Mm-hmm. And that $15 minimum wage, I think that's a whole other debate on its own. The only argument I can think of against it is every other wage would have to start to increase because, why would I be at a higher responsibility $15 minimum wage job? I mean, $15 wage job when I can just go to McDonald's instead and work there.
Well, I mean,
kind of like that.
You're making $50 as in that job. Why would you want to go and make $15?
Oh no, 15. So like, for example, if some tutors out there, they only charge like $15 per hour. But if I could go to like a retail store and just make the same $15 an hour there and not have to worry about, all the responsibilities that I have to do as a tutor, why would I have to do that? So their wages would start to have to increase. And I don't know, that's a whole nother debate, but that's like the only argument I can see at this moment against the...
Yeah, I mean, if you look at the productivity versus wages graph, right? Productivity has been consistently going up where wages have tapered off, and you can say that's due to an influx of a lot of new jobs in IT sector and things like that. But I think we need to have a raise in our minimum wage. I mean, it's been due for a long time. There's people like Rokana who say that the wage has to be $22. I completely disagree with them. I think that could hurt a lot of small businesses, but $15 minimum wage, I think sounds just about right for an increase.
I think the main issue here is that they need to have like a clause in there that increases the minimum wage dependent on inflation or some other metric like that.
Right.
Otherwise, we'll have the same issue like 20 years down the line again.
Yeah. I mean, inflation's already getting out of hand, so.
Yeah, I mean, it looks to be around 2%, maybe 2.5, I think, according to the CBO by the end of this year or the end of next year. So, I don't know. I kind of agree with the Fed is doing or not, but like I said, those are debates that we can have for another time.
So to wrap it up, do you have any stocks that you're looking out for this week?
Well, I was looking at DraftKings possibly.
Right.
Yeah, because of the Super Bowl coming up this week. I don't know. I'm hoping maybe there is a strong rise going into opening on Monday morning.
There was a strong, it had a pretty good rise last week, actually. It went up $10 from 52 to like 62.
Yeah, I think half of that had to do with art, possibly buying some shares into DraftKings. And with the Super Bowl, I guess, coming up as well this afternoon.
Well, I'm going to be looking at Neo, Fuel Cell, and obviously Palantir going into earnings, which is not this week. It's going to be the first day next week on Tuesday because we have Monday off. So, yeah, Palantir, Neo, and Fuel Cell are going to be the trades I'm going to be looking at.
Alrighty, well, I don't think we have anything else to say for this week. So yeah, thank you guys for listening in or watching on YouTube. Make sure to hit that subscribe button, like the video if you're on YouTube, or follow us if you're watching on any one of our podcasts. And we will see you guys next week.
Alright guys, stay safe.